What's up, guys? Want to do a quick video about some things that have been on my mind, mostly about the new proposed IRS tax guidances, um, 1031 exchange, realizing crypto taxes, and some other things that I feel like y'all might benefit from. So, I'm sure that you guys have already heard, but the IRS is proposing 43% capital gains taxes for earners over 400,000, and they're also removing 1031 exchange up to a certain amount. I believe that's 400,000 as well. But the reason why that's important is because majority of the hotel industry, majority of the real estate industry, they rely on 1031, which is kind of like a tax deferment program that the IRS has to basically go from hotel to hotel or from real estate to real estate without paying capital gains taxes on the profit that they made. And I feel like this has vast implications for asset prices in general, because when we're seeing all this inflation happening, we're seeing the government printing a lot of money, and at the same time, if they're basically removing incentives for people to sell, then people are not going to sell. They're just going to hold on to these assets and not incur those capital gains, not realize those capital gains. And if everybody's holding their assets and the government continues to print more money, people are going to, I think real estate prices, and I feel like asset prices in general, are definitely going to go up. That was dope. Yeah, so, and then the same thing goes to crypto as well. So, like, I encourage you guys not to realize all these gains in crypto right now. Just hold on to it. And the reason why I say that is because, there's a lot of uncertainty in taxation right now. The IRS specifically put out a guidance in 2014 that said because Bitcoin is not realized as legal tender in any currency, in any country, sorry, they're taxing it as a property. But now that we have these countries in South America who are proposing legislature create to treat Bitcoin as a legal tender, I feel like that's going to have vast implications for how the U.S. taxes it as well. And I could assure you that there are already crypto companies and their councils that are getting ready to challenge the IRS on these guidances because they're no longer correct. So, and the thing with hotels, and I feel like crypto is much better to be in right now, because with hotels you cannot realize just partial of your asset. Like, you can't just sell one room. You either have to sell the whole hotel, realize all those capital gains, or not. But at least with Bitcoin, you can sell small fractions, keep yourself below that $400,000 limit, and then protect yourself that way. Play the long game here, because all these regulatory agencies are currently fighting over who has jurisdiction right now. For example, the IRS, they treat it as property. The SEC, they treat it as a security. FinCEN considers Bitcoin to be currency, and the CFTC, which is actually the true regulatory body of who should be regulating this, they consider it a commodity, which is actually correct. And so yeah, don't be realizing all these gains right now, because if tax becomes more favorable in the future, sell at that time. Just hold right now, sell enough to sustain yourself. Don't be trying to cash out of all your crypto and then realizing like paying 43% to the government for doing nothing. So, and one other thing is that the crypto industry is very much creating solutions to these problems, meaning if the government keeps taxing it in very draconian ways as they have been, the crypto industry is going to move towards private coins, and they're going to move towards decentralized exchanges, also known as DEXs. And if everybody's using DEXs, then the IRS technically has no data. Right now, they rely on these centralized exchanges such as Coinbase, Kraken, and all the other companies who are under the threat of having their businesses shut down if they don't comply. But then if everybody switches to decentralized exchanges and there's nothing for them to actually shut down, how are the IRS going to even get any data as to who owes what taxes? So I'm not condoning that at all, but what I'm saying is that, the crypto industry is very much two steps ahead of these regulators and very much two steps ahead as to how to protect their own wealth and how to protect their own capital. And I feel kind of bad right now because you're going to see hotel prices skyrocket because nobody's going to want to realize capital gains. And if they sell, they're going to sell at their target price plus 43%. Because they're going to be like, all right, if I actually wanted like 2.2 million or 3 million or whatever, they're going to be like, all right, what's 3 million plus 45% to give to the taxes, So, and because of that, I feel like that's really going to cause asset prices to go up a lot. And we're going to really start to see like inflation kick in a lot more because nobody's going to want to sell assets, including crypto. So, yeah, that's my thoughts about it. If you guys are in hotels, if y'all are taking advantage of 1031, if y'all are in crypto, if y'all are in real estate, hit me up because I'd like to know how you guys are going to be playing, your cards, how your strategies are changing, how your tax strategies are, and things like that, and I'll share with you mine. So hit me up. Bye.